When it comes to Forex trading, there's one thing that is super important, which is the trend. When you actually learn how to dominate the trend, you can increase your profit by 10, 20, or even 30% just like this. Why? Because you know when a trade will actually start changing on direction, or you know when it will continue in the direction that the trade actually started. So in this specific video, I'm gonna give you all the basics in regards to trend in Forex. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. And if you're new to my channel, I do a lot of software reviews, broker reviews, and just like this one, I give you tips and strategies as to how to make money with online trading. So if you're new here, consider subscribing. With that being said, let's jump into the video. So here I am on my TradingView platform, and what we are going to be doing today is actually analyzing what could be a good downtrend or uptrend or downtrend when it comes to Forex trading. And the first thing that I'm going to do is actually, as you can see, I'm on a daily chart right here, and all I need in order to do this is a moving average with a period of 50. You can add it, this is a simple moving average, and you can add it as, you know, any color you guys want. It's really up to you. I have it in red color because I have some other moving averages for different strategies, but for this purpose specifically, we're just going to have the 50 moving average. So how is it that this specific indicator works? Well, it basically tells us where is it that the price is going up or when the price is going down. The way it works is very simple. And before you actually exit the video thinking that I'm just gonna cover the basics in regards to trading, trending, then you might be wrong, because in here, I'm gonna tell you when there's gonna be a change in direction of a trend and how is it that you should identify entry points in order to make a lot of money. Now, obviously right now, I'm actually looking at a daily chart. So this is a long-term trading. Nevertheless, it works for 4 hours and daily charts. So if it's for 1 hour and 15 minutes, it does work as well. We're gonna look at some examples, but what is different is the amount of pips that you can actually make, okay? Therefore, as well, your amount of money that you can make. Let's start with the basics. When can you know if it's an uptrend or a downtrend? Well, if the red moving average or the moving average with a period of 50 is below the candlesticks, then this is an uptrend. And if it's the opposite, if it's above the candlesticks, then this is a downtrend. Okay, as simple as that. Now, how is it that it works? If you can see right now in the chart, you're gonna realize that it has been moving like this. It moves in, it jumps, it drops, it jumps, it drops, and so on. And basically what we're targeting is to know when there's gonna be a change in direction. Because if you actually try to enter a trade in the middle of the trade, yeah, you might be able to make some money, but there might be a possibility of a change in trending. So how is it that you identify the change of trending? Here is a downtrend, right? And if you notice here, it spiked and it changed the trend. One thing that you gotta realize is that you have to make sure that the moving average is far away from the actual candlesticks, okay? It doesn't happen all the time, but right here, for instance, is good. It's like kind of away. There's still a distance between the candlesticks and the moving average, such as right here. But then when the actual candlesticks start to touch the moving average is when we need to pay attention. So for instance, right here, it touched the moving average in this area, but it kept on dropping. Then it touched again in this area. It actually crossed over that area, but then it dropped back and continued dropping. And in this area, you might have thought, okay, so instead of retracting, instead of going like changing its direction, it's going to continue dropping. But one thing that you gotta keep in mind is this small thing right here, and let me delete this. Take a look at when this happened, this right here, when this candle crossed over, the 50 moving average was still going like some sort of downtrend. Do you see that? But here, when it actually jumped, you can see that this one is a little bit more horizontal. You see, this one was dropping and this is a little bit more horizontal. Now, this is one of the indications so that you know, okay, it might change in direction. It's not 100% guaranteed, but it might might change on direction. Now we need to look at a second thing or a second key feature in order to know whether the price is going to jump or not. And that is actually right here. This candle crossed above the actual moving average, but that doesn't confirm that there's going to be a change of trending. It still happened right here as well. We need to have two more confirmations. Number one, there's has to be a candle that doesn't even touch the moving average, even with the wick. Take a look. This is the lowest of this candle and it didn't touch the moving average. And the third confirmation is that there's a candle that it closes above the highest point of the previous candle. This is obviously for changing for an uptrend, right? We're gonna see the opposite right now, but you can see right now that the three conditions were actually met. Number one, it closed above. Number two, second candle did not touch the moving average. And number three, the next candle closed above the moving average, above the highest point of that moving average. So with that being said, we can set what is going to be our settings, which is going to be at the beginning of this candle, and we can set the take profit. I would say that I would set the take profit to the next resistance level. I'm not going to find it in this specific video, and I would set the stop loss like around where the moving average actually is. Why? Because if it drops again to the moving average, then most likely that's going to be the end of the trade. We're not going to be able to actually make money out of it. But if you can see, this doesn't happen all the time, but in this case it goes straight to the point, giving us 455 pips, and this is a 2.58 risk reward trade. So as you can see, yes, it was a good entry point. Okay, so again, let's go ahead and do a small recap. Number one thing that we need to check is that the candle closes above the moving average. Number two, that the next candle does not touch the moving average. And the third one is that the next candle closes above the highest of the previous candle. So this is number three. Here is a good entry point. You enter and start making money. Now let's go ahead and take a look at a different option. Like we're gonna see a change in direction on a sell option. Okay, so this one right here, for instance, we're gonna take a look as well at the same parameters, right? The same indication. This one touched and closed below the actual moving average, right? It was an uptrend and then it dropped and it closed above. This one closed but this one actually touched, so we're still number one, right? This one closed without touching the moving average, so this is step number two. It's still not a sign for a retraction. Okay, we need to wait. So we actually take a look at the next candle. It's been bouncing around. You don't know if it's going to drop or not, and then boom, on this candle right here, this one closes lower than the lowest of this candle. This is confirmation number three. With that being said, and with all these parameters met, we're gonna put a short position at the beginning of the next candle, which I don't know why it's like right there, but let's go ahead and put it here. And what we are going to do again is that we're gonna set it for the next resistance level. You can find what's that resistance level and you set it for the next support level as well. This is a 2.04 resistance order. I would go and put the stop loss into this area, even though it wasn't really necessary, because as you can see, it reached 121 pips in profit. Okay, now this was a change on trending. Now let's go ahead and take a look at when it doesn't change on trending. When it doesn't change on trending is this one right here. So the first criteria was met, that the candle actually closed above the moving average. Then the second candle closed without touching the moving average, so that's the parameter number three. But the next parameter was not met, which was closing a candle above the highest of the previous candle, right? So instead of actually going up, it continued to go down because the criteria was not met. I hope that really makes sense. Let me know in the comment section if it's making sense to you. We're gonna look for one more example of what would be a good parameter to actually enter. And the cool thing about this strategy itself is that you can do long-term and short-term trades, okay? What I mean by short-term, I mean 3-4 candlesticks, and long-term, I mean 30 candlesticks, right? So right now we're gonna take a look at a change on trending in this area. Let's go ahead and take a look at it. So here we have the first first parameter, right? It closed above the moving average. Then we have the second parameter. It closed and it didn't touch the moving average. And third, this one closed above the highest of the previous candlestick. So therefore, now we have a good buy option, right? So we're gonna see a long position here at the beginning of the next candle, which would be this one right here. And yes, I would actually set my stop loss. I wouldn't set up over here on the moving average because it's too low. So I would set it like around this area, maybe below the lowest of the previous red candle, around right here. But this one right here, you can set up for as high as you want and play around with it. If you take a look at it, it actually moved for, let me see how many days. It started on October 17, 2019, and it reached the take profit on January. So it took a while, right? You have two options here. You can actually go for this, which is 250 and 35 pips, or you can just go short, right? And go over here to the next support line and go for 96 pips. Now, what is the difference when it comes to making money? If you've been thinking, oh no, I better go long because the more pips, the more money. No, that's not accurate, okay? What's most important is actually this and this. So whenever you actually placing a trade, you are asked for a percentage of risk, which means if the price touches the stop loss, how much are you willing to lose or how much are you going to invest? Me personally, I never go above 2% of my balance. So if I lose my trade, then I'm gonna lose 2% of my balance, right? But if I win the trade, and this is depending on the risk reward that you actually go in. So for instance, here in this risk reward at 1.49 right here. So I'm making a 96 pips. So it's 1.50 pretty much. So instead of losing making 2%, I'm actually making 3%, because it's 1.5 of my risk reward. This is what's important, not the amount of pips. You can make the exact same profit with 10 pips that you can make with 1,000 pips. It's all about the risk that you put in each specific trade. But the power of this strategy, or that managing the trendings, is basically the fact that you can make money a little bit faster. And we're gonna look at the last example. And just by the way, this doesn't work like 100% of the time. Okay, obviously there are going to be some positions where you're not going to be able to, but it works most of the times. And when it does, you can make a huge profit return just because you can play around with the take profit levels. So we're going to start with a new one. This one right here, for example, this is a perfect example. It crossed below the actual moving average, but the next one actually touched again, so we don't move, and then the next one is going up, and it didn't work. This was not a change on trending, right? Now this one right here, the first criteria, yes, it closed above. Then the second criteria, yes, it closed without touching the actual moving average, but then we don't have any candlestick like really closing below the lowest level. This one right here closed a little bit above the level. Then we have two green candles, another green candle over here, another green candle over here, and if you notice, it never changed on direction. So this is a second one that did not meet the third criteria, and therefore we're not going to enter that transaction. Okay, and then we have this example right here. This one closed below the actual moving average, and this candle right here closed without touching the moving average. This doesn't mean that it reached the third criteria. It just meets the second criteria. So we need one more candle that closes below the lowest of the previous candlestick. So this one right here closed right here, and this one closed in this area. Therefore, we have now the third criteria. Okay, now that we have the third criteria, it's time for us to enter a short position, which will be at the beginning of this candlestick right here. Let me just go ahead and move it. There you go. So it's going to start right here. I'm going to put like a little bit above the moving average just in case it retracts. But here I can actually put my take profit wherever I want. Obviously, it's impossible to guess where the price is going to be, but you can actually play around with it. I'm going to teach you exactly how you can play around with it. So you find the next support line if you can find it. We're gonna assume that is this one right here. And then you enter the position, right? You enter the position right here. Now, take a look at the risk reward is 1.92, almost 2%. So that means that if I lose 2% of my balance, because I'm risking 2% of my balance, I can make almost 4% in return if this take profit is actually touched. Now, what happens if the price, like it started right now, it started dropping and dropping and dropping and dropping and it got all the way over here? You can move your stop loss level and you can put it like around this area or even in the previous resistance line right here in this area, you see? So you put the new stop loss level and you move your take profit to the next resistance, to the next support level, right? So then the price jumped a little bit, but then it continued dropping and more and more and more, and it hit the take profit right here, the new one. So right now you can see that the actual win ratio is 2.4. So if we go and do 2 times 2.4, that means that we're making 4.8% increase in our account. Like this, 4.8% increase. And more importantly, you can continue doing this. Obviously, there's gonna be the risk when you're gonna move your stop loss like around this area and then boom, it touched the new stop loss, but still you're gonna make some profit out of it, right? So this is just one way to actually increase your profitability using the trending. But as you can see, if you continue doing it and you continue, your power of making money is unlimited. Take a look right here. It's over 7,000 pips. Obviously, this doesn't always happen. And like I said, we can go ahead and do it. Right now, we're looking at a daily chart, but if we actually take a look at a 15-minute chart, then what we are going to be looking at is exactly at the same parameters. Now, what's the difference? The difference is that when it comes to 15 minutes, you are affected by news, you are affected by volatility, while with one-day trades or one-day candles, that doesn't necessarily happen all the time. But we can go ahead and take a look at the parameters right here. So we're in a 15-minute chart right here. And yes, this one closed above this one as well, but this one actually touched the moving average. So this parameter number 1, then this one didn't touch, that's parameter number 2. And now we need one candle that closes highest than the high level, which will be up until this one right here. As you can see, this is the third criteria. It took a while, but now we can actually place a long position. But like I said, in 15-minute candles, it's completely different. Why? Because at the end of the day, you're not looking forward to make that much profit. If you notice in Euro JPY, for instance, we're only looking at 11.8 pips, and you can actually set your stop loss like around a little bit below the area of the moving average, and you have a 2.41 risk reward. Now, this is gonna be a super fast trade, and yes, you can make the same much money with it, because at the end of the day, if you're actually risking 2% of your balance in the stop loss and it's 2.5 pretty much, we're talking about, let me see, because I'm not really that good at math. So 2 times 2.5, that's 5% increase in your account in no time, right? We're talking about what, like a couple of hours, maybe 3 hours, and you can make that much money. So yeah, it does work as well in 15 minutes, as long as you actually check and make sure that you meet the criteria of the candlesticks. Hey, so I hope this video really helped you guys out. And if you did, make sure you smash the like button to help the increase of this YouTube channel. And more importantly, if in case you have any questions, you can put them in the comment section below. I'd be glad to take a look at them and answer them as soon as I can. And don't forget to subscribe for more content just like this one. And I'll see you on the next one.